Hello and good day. Daily analysis of the gold chart on February 23rd. In last trading day, the price experienced a bullish pause, which ultimately, after closing with a full body candle with a wick, continued the trend. The bullish trend continues this week, as we can see that.
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.
With the start of Monday and the opening of the Asian markets, the price made an aggressive move upward and eventually faced selling pressure. If it manages to close above its previous swing area at the $5,120 level and forms a strong-bodied candle, this indicates the end of the bearish trend and the beginning of a bullish trend in the market. However, if it moves downward and closes within the consolidation range, it could be accompanied by increased selling pressure. We would then target the $5,000 level again. We can also use it as an additional confirmation for the trend. A price uptrend will occur if gold closes above its previous swing high. Based on the correlation between gold and silver, if silver also closes above its previous swing high, high, that would effectively serve as our very second confirmation. And furthermore, it would solidify the bullish trend outlook for us. However, if silver closes below its previous swing low while gold closes above its previous swing high, this could indicate a divergence and the price may move downward. Analyzing the 4-hour time frame for gold, we see a bullish movement with displacement. We can see that the price started moving upward at the beginning of the day and eventually faced selling pressure. It is currently forming an evening star candlestick pattern, which we can observe by analyzing the RSI indicator. The price has entered a high potential zone, which could signal the continuation of the trend. There is a bullish sentiment in the market. If, during the rest of the day, the price faces selling pressure, it may fill the gap zone. If it moves downward and enters the rejection block zone, if a trend reversal is identified, if there is a bearish move and a break of the CSE level or a market structure shift, we can enter a buy position targeting the swing highs and the fair value gap area in the market. However, if the price is accompanied by downward momentum and forms strong bearish candles, it could continue the trend. It could continue its bearish move until it collects liquidity below the previous lows and forms new lower lows. That's it. The 4-hour order block extends down to the 4,950 level. And the $4,900 area could be if the selling pressure decreases at the $5,000 level, the price could stop there and move upward from this area. The bullish price movement was based on the weakening of the DXY index, which, according to the ruling of the US Supreme Court, the definitions imposed by Donald Trump were declared illegal. And as a result, the DXY index decreased, and following the decline in the DXY, gold also increased. With the analysis of the 1-hour time frame for gold, we can see the bullish price movement. The price broke through the order block area at this point, and ultimately this area turned into a breaker block, which can serve as a support level for the price. If there isn't enough strength for a bearish move, the breaker block level can push the price upward. But if it is accompanied by strong candles, it can move toward the target. It may enter the rejection block area at the 5,042 level, and if we identify signs of a bearish trend and candlestick patterns, we can, enter a buy position, which is considered as trading strategy number 2. And the price can move downward if there is a lower sell entry with a candlestick, or if liquidity is collected toward the sell side and then returns to the range again. A pin bar candle closes. We can enter a trade position based on confirmation, analyzing the 15-minute time frame of the gold symbol. We see the correct price movement, which moved upward. And a liquidity pool has formed on both the sell side and the buy side, which could cause the London session to move downward. It collects the liquidity on the sell side. And finally, the New York session could be accompanied by a bullish distribution move. But if the London session moves upward, will it move? Will it collect the liquidity on the buy side, or will it move downward? The New York session could then continue with a bearish distribution move, in line with the trend. May your downward trend continue. Wishing you success and profits.